Okay, thank you very much for coming. We actually gathered here a really good set of speakers, and we'll try to bring you, like on a really charismatic and practical way, the legislation in, let's say, the world, but maybe predominantly focusing on the EU and the US. And maybe just a question before we start. I got a question from our speakers. What will be the, let's say, who will have in the audience? So just think about how many of you are actually familiar with the regulatory stuff. You can just raise your hand. Okay. And the people actually not into regulatory but want to find out more? Okay. So pretty much we have...
Half and half.
Yeah. It's like 30, 70. So yeah, we'll start with MiCA. Like MiCA is something you hear like every day, and pretty much we are all talking about MiCA and the new regulation that will hit us in the coming period. But pretty much I know by myself, like I didn't dive into MiCA that much because it's a large document, so I just read a lot of summaries, but still not aware what actually MiCA brings to us. So maybe just to ask our speakers for the opening to just summarize, let's say, the most important things about MiCA and what we should be actually aware of in the coming period. So whoever wants to start, just please. You're looking at Nena, right?
Okay. I have to say that I'm very pleased that we finally got the regulatory framework for crypto assets in Europe, okay? Because what standard is made in Europe, it's usually valid for the rest of the world. This is the first thing. The second, I should say, maybe it was a long process of negotiations within MiCA, how to define, how to set the terminology, how to go away from that very well-known old terms like utility tokens, like stable coins and so on. We got completely new terminology, and this was the first thing that the member states and the experts were fighting also with the Commission, I need to say. For almost 1 year, the process was ongoing, and now we have it. What is very important here is that at least we got some definitions, and at least we have something to change in the future. Without nothing, we cannot change anything. On the other hand, it gives a lot of power to national regulators, and additional power and additional burden. So I think it will be needed to be changed, okay? On the third thing is that it brings a kind of legal certainty and the protection of the competition somehow in the internal market of Europe. And what is also very important, it does not regulate NFT. And it gives the place for innovation. It gives the place for upcoming Web3 solutions that NFT is inevitable part of. So maybe this for the introduction. And I'm happy also that we got together within the package of MiCA also that DORA for cybersecurity issues. And on the other hand, DLT pilot regime, maybe we will talk about this a little bit later. But what is very important is that DLT pilot regime will connect first the financial sector, then sorry, SME sector, and boost the innovativeness, and the solutions that are being developed on the European level for European blockchain services infrastructure, but maybe in details a little bit later.
Yeah, we'll talk about the funding available at the EU and this pilot regime, which will be really interested. But maybe just thinking up with MiCA at the moment, like we also have like a pretty wide scope of MiCA that is covered. So maybe like Xenofon, myself, and you actually spoke about the crypto asset service providers and how this is actually going to affect them. So maybe you can tell us a bit more of your perspective. What should actually crypto asset service providers be aware of when it comes to MiCA?
Absolutely. First, I just want to introduce quickly myself and why I'm here. alongside the other panelists here, we work on trying to help European policymakers make the best decisions for Europe, and that's aligned for everyone. And I work through INATPA, association created by the Commission, with the help of the Commission, I'd say, and 150 plus members, to make sure that the industry, all of you, are represented when these policy-making discussions happen. So, in other words, we help these now defined CASPs talk about how they need to be properly engaged with regulations and requirements. And with that, when we define a CASP, we define a company, a centralized entity that is based in Europe that is providing 6 forms of services. Exchanges, for example, are CASPs. Advisors for investments are CASPs. Developers, I think, of code can be CASPs. What we do not define as CASPs are DAOs and DeFi protocols, which is very important. And that was something that we pushed very hard to achieve. There is still a bit of a gray zone there because all of those innovative protocols and projects are not part of the regulation. We are waiting for level 2 regulations. Just so you all know, after the file passes, which is a huge process and ordeal altogether, there comes level 2 and level 3 regulations, which are guidances provided by ESMA, the EBA, and other authorities in Europe about how to implement these rules effectively in the market. We're still waiting for a bit more guidance on that, which is going to clarify entirely what is and what isn't part of it. There is still, of course, questions to be answered, like how can a compliant centralized entity become decentralized? But CASPs are not DAOs and DeFis, and that's by design, because they want to ensure that the growth and innovation of the industry continues for years to come, until there is a much clearer version of how these requirements can play out.
So yeah, they're pretty much going to be affected by MiCA, and probably they're going to need, if not yet, need to go and enter into some process of licensing and actually, I don't know, fulfilling the other requirements in order to be registered as a CASP within the EU.
I don't think. Can you hear me? I don't think DAOs themselves will be licensed. I think some centralized organizations that do some of the community development and coding will be licensed CASPs. And I think they should and ought to be. These requirements are not crazy requirements. They're quite reasonable and rational, actually. That's what I'd say. Of course, some would disagree, but for what we've seen in other jurisdictions, Europe is providing a much friendlier, much more clear and understandable framework for our industry currently. And I hope you guys agree with this.
No. It doesn't limit this, but we talk about DAO. DAO is one part, and financial instruments are the other part. So the common denominator here, if we look into the common denominator, is that we have the possibility also to the native decentralized digital presentations to be licensed at some point of the time, okay? DAO can be supporting instrument for governance, for funding the projects, okay? But there are bylaws for DAO already structured and already communicated, but what I think is that DAO is not the only one thing that is needed to be or pending to be regulated. It can be directly integrated into the legislation for the corporate laws in the some countries and so on. And it's easier to do it on the national level than on the European level, probably. It does have something with we will talk later about the Data Act. Things need to be clarified. But in any case, if we talk about financing, about supporting small and medium enterprises, about registering that issuers of the funding or financial instruments, then I think that we need to talk about the regulation in the financial part and in organizational and the management part of crypto assets.
So yeah, in the coming period, we can actually expect that everything we now know will be recognized somewhere in the legislation. It is just a matter of how it will be regulated, and whether there will be just a sort of a framework or just a national at the level of the let's say separate countries to be regulated as such. So maybe we'll have some different rules in the different countries, so they can
Well, the goal of MiCA was always to passport a license across the whole of the union, right?
Yep.
And it's important to also mention that anything that's a security is not under MiCA. So if you have a tokenized security, you need to comply with MiFID too. That's correct, right? So everything that has to do with securitization or real-world assets is part of the existing regulations. This is a new regulation for crypto assets. Things are different in their nature, not security-based. Goal was passporting, and still remains. When you don't have something in the scope of MiCA, it might not be passported across the union. And that is the risk that we have of not having some of the NFT projects or some of the DeFi and DAO protocols out there. At the same time, it allows for the gray zone to continue to exist, which, let's be honest, a lot of innovation has happened during the gray zone, right? And that's something that I believe is valuable. And I think policymakers understand that there still needs time to understand what needs to happen for these requirements to be properly drafted and implemented for the industry effectively without killing it or over-complying or over-requiring things from innovators that are building things,
Yeah, it sounds like a healthy approach, right? Yeah, sorry, Thibault.
If I can just intervene on this point. So what you see if you look at the history of competition law, privacy law, IP, tax, is that when you do have those legal instruments coming out of Europe, for years after that, after they are passed, you see a fragmentation in how the countries interpret those instruments, right? I think this is exactly what we're going to see, for instance, with the NFTs. In theory, NFTs are not covered by MiCA. It's Article 2, Paragraph 3. If you look at recital number 10, it tells you NFTs are not part of it, but recital number 11 tells you they can be covered by MiCA if they are part of a large series or collection, quote unquote. I'm not here talking about the fractal NFTs, I'm talking about CryptoPunks and this kind of stuff. And they say if they are, this is something we can take into consideration. This is an indicator of the fact that they are fungible and therefore covered by MiCA. Now, each country is going to have a different interpretation of that. And I expect that for the next 3 to 5 years, you're going to see fragmentation again, and it's going to be hard to navigate. This is what happened in all of the fields of the legal field. Eventually, because it diverged, you will see that some people will appeal what national agencies are saying. This will go to the General Court, the Court of Justice of the European Union, and eventually the court will here give us the way to actually read the EU law, right? And then after those years, you do have indeed some more coherence in the way we interpret the law. But my understanding, if we look at what happened in all the fields of the law, is that for the next coming years, we're not going to have, a beautiful single market with just one rule understood the same way all across Europe. So it's going to be hard. It's going to, hopefully we'll be here next year again to discuss, what's the interpretation of MiCA. But don't think of it as, I just look at EU law and that's it. You have to be aware of which jurisdiction you want to be compliant with.
And also we have tokens, right? There is like different tokens recognized by MiCA at this moment. So this is something that was actually regulated pretty much in deep. So can you tell us something about that, like which tokens are recognized and how actually MiCA defines them?
I can talk a bit about that. And I think the important discussion is mostly about stablecoins. So just for some background, MiCA was drafted in 2019. In 2019, the biggest topic, besides the bear market, was Libra. Much of the work that was done was there to target ICOs from 2017, to target CASPs, in other words, service providers that exchanges and whatnot that operate in the space, and then stablecoin issuers that were somewhat competing with national interests, right? So you have the utility tokens, which I'm going to skip the definition for a second, but you also have asset reference tokens and e-money tokens. And then you have requirements for CASPs. Now, A utility token is a token that pretty much helps a system work without it being a security. That's a very broad definition. Perhaps, Thibault, you can make it a bit more precise in a second. But at the same time, e-money tokens are tokens denominated on a fiat currency that are backed by fiat. That is my understanding. The asset reference tokens are stablecoins that are referencing an asset. These can be gold-backed stablecoins. These can be other asset reference tokens. If you reference an asset, then you need to have backing it. You need to have some backing for it. Algorithmic stablecoins are not really part of it. There is a question about stuff like DAI. Some people think it's going to have reference. It's going to be part of the asset reference tokens. A lot of people say that, actually. Others say it's not really part of the regulation. We'll see, right? I don't think it's entirely clear until we wait a few years. Would you agree with these definitions?
Yeah, so to try to make it as concrete as possible, first I agree. So if you want to issue some crypto assets, what you need to do is to come up with a white paper. Mika will tell you exactly what you need to have in that. So read that carefully, it's actually pretty clear. Then you need to send the white paper to your national regulator at least 20 days in advance. It's just a notification. So you just need to send the white paper. You do not need to wait for an approval. However, that national regulator may prohibit you from issuing that crypto asset. So it's always a possibility. I think what you're going to see is that those national regulators will give you a template and say, this is the kind of information that I want to see. And if you don't use the template, you'll be in dangerous water. So that's for crypto assets. If you want to go for the ART, then what you need here is to send the white paper 20 days in advance minimum, but there you do need prior authorization, right? And you also have some more requirements. You need to have 2% reserve, and there is a new concept in MiCA. If you are issuing a significant ART, then you need to comply with more obligations. You need to have 3% instead of 2%, and so on and so forth. And the last one, if you go for the EMT, then you do need to be a credit insurance or e-money company. There you do need also to send the white paper. No need for prior authorization, but you do need also to meet the reserve threshold. All of that is detailed in MiCA, and it's very important that, of course, you comply with that. Otherwise, the fines are absolutely enormous.
And if I remember correctly, e-money tokens are 100% backed. They need to be 100% backed.
Yep.
A big question for the industry, because some of our most important and useful tokens we're not certain how well backed they are.
It's a nice way of saying it.
Yeah, but is it all we didn't mention that reserve fund, that it's a kind of obligatory under MiCA. So even if it is backed with that reserve fund, it is important the custody of the asset, and also the question is how the regulators will be able to control the transaction which will be made off-chain. I think that neither European Commission has the appropriate answer. And this is why I like it so much, that DLT pilot regime, because it gives an opportunity to operate on DLT, on distributed ledger technology, on blockchain. This is a real application of blockchain for securities, for classical financial instruments, and for either for crypto assets, to show how they behave in non-regulated environment, so that we can translate this from non-regulated environment to the regulated environment after some 1 or 2 years using of MiCA. And this is very important, because within this pilot regime, there will be an opportunity to define the role of regulators like central banks, like security issuers or agencies for security markets, classical institutions. It will enable to learn about the tokenization, what it means in the cross-border transactions, what is the ownership and the custody, everything like this, which can be, in the end of the day, through the implementation of MiCA and DLT pilot regime, also put into the regulation. I think the MiCA is only beginning, and the mechanisms that are constituted in parallel will be very important to define the real regulatory environment after 2-3 years of implementation.
Understood. So we just need to give time also for the technology, but also for the regulator in order to clarify everything and actually see, as you said, whether we actually need to amend something we have written at this moment. So.
Yeah, and see how it behaves, you know, because if the regulators meet for the first time tokens that can be cross-border interoperable, and we have cross-border interoperable infrastructure, which is called EBSI. This is European Blockchain Services Infrastructure. Now we are developing self-sovereign identity. This is personal data, which is very relevant, that can be transferred on this. And it is step within that financial transactions as well. We will have, for example, digital identity for the companies within that SSI. And it will boost the investment in Europe, it will boost the innovation and SMEs. And we cannot only stick to MiCA and to asset reference token or e-money token. There will be probably some types of the token that we cannot foresee at the moment. As DLT pilot regime enables creation of native tokens that are simply based on blockchain, or to use financial instruments on DLT just for transactions, just for that changes that can be made. And that are two models that will be tested in the future and also seen how it can be used in the further transactions.
Understood.
I just want to clarify. We talked about the PRR, but we haven't actually discussed exactly what it is. So very quickly, the PRR is a thresholded pilot regime for MTF CFT settlement. That's correct?
Correct.
That allows for credit institutions or other licensed institutions to settle assets using blockchain. And this is a pilot regime because it allows policymakers to see all of the things that we just discussed about what works and what doesn't work and how to effectively monitor and implement requirements. And people might not like requirements, but it's much better to have good requirements than bad requirements. And that's the whole goal of what we've been doing and many other people have been doing, just trying to ensure that Europe is at the leading edge of this to help the industry become what it can be as a global player. You know?
So yeah, we're sort of having some sort of a sandbox regime just for that, just to see where actually the innovation will go, and actually to develop the regulation in parallel with the development of the innovation. So that's good also.
Yeah, that's good. And it's good because on the national level, we will somehow motivate the regulators to start to create that sandboxes, to learn about technology, and then to set the standards. On the European level, okay, we have the standards for a specific protocol, but we don't have general standards for cross-border interoperability, for transfer, for example, for the legislation which could be used in specific cases and so on. I can say that UNCFACT, this is United Nations Commission for Trade, developed until now 270 standards, but more or less on semantics. Not, we are missing the standards for interoperability for cross-border transactions. And here is very relevant also for that token manipulating system, yeah.
Yeah, speaking of transactions and let's say in regards to the crypto world, we also talked about the travel world, so TFR. So this is also something not that new because in the banking sector, this is something that exists for the past, decades. But how this is going to be implemented in crypto world? So what are the requirements there?
Do you want me to go first? Okay.
Yeah, whoever wants.
So the TFR is what we've talked about thresholds, and I think a lot of people have heard about this. On Twitter, there was a huge panic about banning transactions over €1,000 on chain, but that's not really the case. Remember, all of these requirements are on CASP, centralized entities that are CASP defined by MiCA. The TFR creates thresholds for the data you need to provide on transactions over €1,000 from a CASP to a self-hosted wallet or to another CASP. Peer-to-peer transactions, me to you, or to anyone here, are not thresholded by any means. It could have been much worse. I think we all agree there.
Yes.
It's a victory that we've had the ability to allow some flexibility, but really these requirements are the same as other financial institutions, right? And as long as we can present information that says that, hey, this is a less risky operation for a less risky industry, then we are going to be at the same risk, same rules, same principle, I guess. And that's what the TFR is about. It came from FATF. We're going to be talking more about that tomorrow with Thibault, about how policy becomes policy. But yeah, that's the TFR, and that also passed alongside MiCA. The PRR also passed. We were talking about our victories. I think we also need to talk a bit about what's coming, because there's a lot of things happening at the same time. Anyone else wants to add anything about the TFR?
No, you said everything, I think.
All good. Yeah.
Yeah, maybe give a chance to Nena to speak about the EU funding, because I think that's really important, and I think we have like 5 minutes more. And we have also Thibault. He has some interesting thoughts about some court proceedings, especially in the US. So as we get some time, we'll also speak about that. So please, Nena, I know Xenofon is really excited about the funding and everything. So I just want to give you some time to speak about that.
Actually, there are more things going on in Europe. It was 2 years ago, probably it was a kind of innovative action from European EIF, Investment Fund, and European Investment Bank. It was again piloting. We are all piloting at the same time some different areas. It was a pilot instrument supporting innovative SMEs on blockchain and AI. It was one-time equity funding, but they are thinking about a repetition of this funding, maybe in different cases and different verticals. But what is even more important, and also in the connection with what we are talking today, is that Europe is dedicating a lot of funding to develop that European blockchain services infrastructure. It is important because it works in the principle of central management, which is on the European Commission side, but node functioning, which are in the member states. And we are trying to get to onboard another countries as observers, so I will invite you in the later stage. Probably we are going to talk about this tomorrow. Also to connect with us, to put the node in the country and to operate EPSI. The third thing is that for the first time last year, Commission enabled certain use cases to be financed with the European funding. So we got a lot of the projects on EU wallet, with a very tough connection with EIDAS regulation, which is now also in modification. Then for SSI, so self-sovereign identity, which is derived from diploma use case. It is based on verifiable credentials and also social security pass, very relevant for the personal data and companies' data. The third thing is that we are developing that Trace for EU traceability use case, which is based on a bottom-up approach, how to notarize, how to trace certain issues. On one hand, data and documents, and on the other hand, products and materials. And it will have high value added, but for this, if I say, for example, 10 to 15 million for each project is dedicated to this. And with these projects, we will get real basis for real use of the use cases on blockchain infrastructure, check that interoperability, create the standards, and include as much as ecosystem into this interoperable infrastructure. So Europe is adopting 2 years working plan. It is called Digital Europe Program. I will finish now.
I think we'll still have time. It's
okay.
lunchtime afterwards. So
Thank you. And we also are in the process of creating first European institution on blockchain. It will be EDIC, European Digital Infrastructure Consortium, which will take over the coordination of all that funding, probably 10 million euro for development of EPSI and for further use cases, also financed by member states. But it will be possible to participate. All the countries which will express the interest to participate like observers, if not full members, and then we will have really the opportunity to develop those things together on the way to Web3, which is the final point now, for example.
yeah, it's really encouraging to hear that, because there is a lot of things happening in parallel, actually trying to, let's say, push the blockchain technology into the real world, and actually EU is behind that, and that's really, really nice to hear. And also, Thibault, sorry about that. You also said that there are other regulations we need to have in mind, something like one of the things is actually Data Act. So can you tell us more about that and what should be aware of in terms of a Data Act?
Sure. So I'm afraid I'm coming with some bad news, because there is not only Mika, but way more for you guys. Generally speaking, if the law is not clear, it's on purpose, right? So don't assume that the policymakers are stupid and don't know how to write the law. So the fact that we do not know whether or not NFTs are covered by Mika is on purpose. There is probably a reason behind that. The same goes for the Data Act. So the Data Act, still a draft, needs to be negotiated. It is as we speak. But Article 30 will tell you that if you use a smart contract for the purpose of transferring data in the context of IoT, then you have to have a backdoor, the kill switch function. Now, where it's not clear is, first, what is the definition of data sharing in the Data Act? It's not actually there. So I can make a point that every transaction is about data sharing, right? I actually know that you want to transact with me. That's some information. And the Data Act defines IoT as being hardware. I know the European Commission, because I worked with them, had in mind, driverless cars, sending information, so that we understand. But it also says that software are IoT. So pretty much, it could be that one way of reading the Data Act means that every smart contract, because any smart contract is about transferring information, has to have a kill switch function. What is not clear in the Data Act is who should be in a position to actually call that function and stop the contract. Is that the person who put it on the chain? Is it the policymaker? Do we need a vote, a consensus? All of that is unclear. There are big efforts to try to take it out of the final version of the Data Act, but as I speak, it is there, right? So that's one. Another one is the AI Act. Now, the question might be, why am I talking about the AI Act, and why is it something that I think you should be concerned about? And there, I think that the fact that the drafting is not clear is not on purpose, actually. And discussion I had with the European Commission suggests that they maybe made a mistake. Thankfully, it's still a draft, and we may see in a final version what we have. But as I speak, the definition of AI is basically, of course, machine learning, supervised, unsupervised deep learning, but also expert systems, anything that uses statistics. So with that broad definition, you can make a point that smart contracts are AI in the eyes of the European Commission. And if so, then you need to comply with all of the requirements in the AI Act. And I think it's nearly impossible due to the decentralized nature of a smart contract. So again, something to keep an eye on, and the final version may actually be better than what it is now, but I think we should be concerned with that. And so if I may say, when the law is unclear, then who's the ultimate regulator? It's the court. And often when we talk about regulation, we tend to think about EU institutions, but we tend to forget what the courts are saying. I'll just give you very briefly 2 examples of why we should be concerned with what the courts are saying, knowing that the level of expertise is actually much lower than what you see within the European Commission or other institutions. In one case, a group forked the Bitcoin ABC blockchain. The reason is that they wanted to increase how many transactions per block. The original group wasn't too pleased with that, introduced an action before the courts. It's the case United American Corps. And in 2021, the courts finally told us that the fact of forking a blockchain is not illegal per se, but this could have been a different outcome where the courts in a different world could have said, if you fork a blockchain, what you do is that you divide the value of the original chain, and because there is an agreement to do so, that's anti-competitive. That's an infringement of the Sherman Act. Thankfully, the court did not say that. But imagine a different world in which the court is basically telling all of us, you can't fork a blockchain because that's illegal. This would have been a disaster. Another case ongoing is a case against USDT, in which there is currently a case against the foundation for issuing USDT, potentially not having all the reserve, using those USDT to buy other cryptocurrencies, inflating the value of those cryptocurrencies. A bubble exploded, and some people are suing USDT for 3 times the amount of what they suffered. They estimate that the damage is $600 billion US dollar. So they are suing USDT for 1.4 trillion US dollar. Now, I have no idea what the court will say, but if the court says that indeed there is an infringement of the law there, imagine the impact that taking down USDT, because this will be the effect, could have on the entirety of the crypto market. So I'm sorry to come with so many bad news today, but it's important that we keep an eye on what the courts are saying on top of the regulators, because the regulators will sometimes design the law in a way that is unclear on purpose so that we could apply that on a case-by-case basis, but that's unfortunately dangerous.
And this is why we left you for the end.
No, before we end.
Yeah, sure.
Just some good news. Everyone is trying to get the best solution done for the industry when it comes to policy making. It's not easy. Just know that there are people out there that are pushing for the interest of all of us to make this an industry that is mature and has the impact that it can have. It's not easy. It's going to take time. If you see things on Twitter, don't freak out and tweet the policymakers. That's a bad idea. You can tweet Thibault because he knows everything much better than and clarify. He doesn't like that perhaps, but that's my suggestion to you all. But yeah, keep on building. See if you can build with some of the initiatives that Europe has, because that's going to make things much easier for us in the future. And step by step, we will get to where we want to get. And remember that people want the best. Everyone wants the best. They just don't know what the best is yet. So we're trying to figure that out. That's my positive note.
Yeah, please, Thibault.
Just another positive, good news for you. So actually 2 years ago, Vitalik and I published a paper explaining how the law is actually useful, whether or not you are a crypto anarchist, whether or not you think code is law and self-sufficient. I think this is not the case, and this is what we argue in the paper. And what I want to tell you is that you may have a decentralized ecosystem all you want. It does not exist in a vacuum, right? You need to rely, as you know, on existing infrastructures. And in fact, I'm pretty sure that most of you are on Twitter, right? And Twitter is not decentralized. And so what you see is that those Web2 players may be tempted to use their power against Web3. And this is where you could actually use the law and complain, right? So competition agencies, which is my main field, are, trust me, very willing to understand what's happening and to protect you from the anti-competitive practices implemented by those tech giants. We see that YouTube is regularly taking down Web3 channels. Maybe they have good reasons, but maybe not. We see that AWS controls, most of the nodes. So if you feel that a practice against your project might be an abuse of a power, just send an email to your national competition agency. They won't come at you, because if they were to do that, imagine the disaster this will create and the kind of signaling this will send to all of the players in the ecosystem. So just get in touch with them, they will answer you, and who knows, maybe you could, stop the practice, get compensated for the practice. So we came with all of what the law is controversial, and actually creating tensions with what you want to achieve, but also use the law because it is here actually to protect you against other players from outside of the blockchain ecosystem.
And exactly for this, European Commission adopted Digital Market Act to protect the consumers, to protect the users, to protect everybody from that giant platforms using the data, owning the data, and abusing the data of the people. So Digital Market Act, Digital Services Act, and what is good with the AI Act is that ChatGPT appeared. And now nobody from the European Commission knows where to start because the law, they started to prepare AI Act in 2019, as you said. Yeah. And there was no ChatGPT, and now it appeared. So this is another problem that will need to be solved. How to take into account that ChatGPT version 1, 2, 3, 4, and next versions, and what to start to regulate. Before that, it was only the focus on ethics and on education within that AI Act. Now, we have the issue that somebody is replacing a lot of that narrative and content-based activities. And this is really the challenge also for the European Commission and the regulators.
Are we good?
Good.
Yeah.
Good.
I want to take an applause for our speakers. Like, really, thank you for this. I think they're really good proxies for us and for the industry because I just, for the couple of days, I got to know them, but really I sense some really positive energy, and because they're, let's say, closer to the regulator, I can say that we really have, as I said, like really good proxies there, that someone that is there to clarify how the industry works and what actually, which regulations and which provisions would actually stop the innovation. So we are all, fighting for that and fighting for allowing the technology to still develop. And I'm really glad to see that there is actually a regime for that, and hopefully this will implement in the nearest possible future. So I'll close the discussion now and ask you if you have any questions to raise your hand. Yeah, do we have a mic? Yeah, thank you.
Hi guys, thank you for an interesting panel. I'm interested in your opinion and a policymaker opinion of for CBDCs. Like you mentioned, the stables, and I'm just curious, are they gonna allow both of them to coexist, or are they gonna make some law and just slowly but surely kill the stables? Thank you.
If it is for me, thank you for the question. I actually think that we had a great opportunity with CBDCs. No matter that Japan started 3 years ago and it slowed down a little bit the actions, the other Eastern countries go on. But in any case, also CBDC or digital euro, I cooperated with EU BOF within the preparation of the study of the comparison of digital euro. Shall it be used DLT regime or the standard one? And what I think is that because we know we have boards on the level of European Central Bank that has been studied both of the possibilities. I think that first, it can very well replace the cash money. Okay, it is not about only about the cryptocurrency. The second thing is that anonymity that can be used. I'm not the advocate of anonymity, but in any case, it will be possible. But the third thing, which is the most important, it will definitely have an impact on the transformation of the classical financial sector. And for this, this is a great opportunity. Classical financial sector will need using, if they decide to use blockchain technology and this peer-to-peer communication, they will need to face the current development, and they will be forced to innovate new financial products, new financial services, to be in step with that innovative technological processes. And for this is very beneficial. It can make the process cheaper, more efficient processes in banks or insurance companies or bank-like companies or financial service providers. And on the other hand, it will result in bigger protection of the consumers, of the customers. And the third thing is that it will make the asset management system more transparent. With that peer-to-peer transaction, it will be enabled very lower cost for the transactions. But on the other hand, I think that it's very important to start to transform traditional financial companies. Without that non-intermediary concept of blockchain, it will be enabled more quality financial transactions, but also higher quality of financial services that we can call them auxiliary service. That are side services that will be developed also with the focus on the customers of the banks. And this is one of the most important things of CBDCs, of digital euro and other central bank digital currencies. It means the transformation of traditional financial sector. So from the policy making, definitely also in Slovenia, we will make steps forward. We just had one financial conference on the national level and decide to create a steering group committee acting like sandbox, but to go step by step in the digital transformation of the classical financial sector.
Yeah. Just a quick comment. So if I look, you can't hear me anymore. No? Yes, you can?
Yeah.
No, it works, okay. If I look at what's happening in other fields of the law, so not crypto-related stuff, there is a concept that is getting traction. That's one of GPC, Great Power Competition. If you've never heard of it, that's a concept coming out of geopolitical studies. And it's getting traction because it's actually trying to understand the dynamics between countries and how the law is actually used as a weapon against other countries, right? This is huge in IP, privacy, competition. If you can actually put yourself in a position where you can argue to your government or your economic zone that you can be useful in this concept of GPC, I think you will be in a very nice position. For that reason, to answer your question, I think it's absolutely out of the question to regulate the CBDC out of existence because China is doing it and other parts of the world are doing it. So there are, for that sole reason, despite all of the good arguments we could make, trying to push for CBDC, and if you can play a role for that, again, the law will become suddenly the ally, and the policymaker will also be. So check it out. The concept is, again, great power competition. There is a lot there for you to read and get inspired about.
And I also want to very quickly say, listen, the policy is now clear about stablecoins, right? The only ones that can regulate, actually, they can kill stablecoins is the market. If you don't use stablecoins, they are going to die. If you use stablecoins, they're going to keep existing. So that's pretty much it. The market decides, you decide if stablecoins are going to exist or not. That's my 2 cents. They can do many things. And you're right, CBDCs are a tool. It can be positive and negative tool. But do you expect us to use CBDCs in a more positive way or a more negative way compared to, for example, China? So it's a competitive thing, and great power competition is very important. It's a tool that we cannot not make. It's something that we will have to make, and it's going to be done properly better, most likely better here than it's going to be made in other jurisdictions. And ultimately, stablecoins and your use of stablecoins as a market participant is going to be up to you. If you and all of us, it's a generic you, right? It's not just you specifically. But if all of us stop using stablecoins or see that stablecoins are not worth it, they're going to die. If not, if there is a use for them, and I think there is a big use for them, they're going to keep on thriving and existing. Even in an infrastructure that includes CBDCs as part of the cash alternative system. And believe me, I'm a cash and crypto guy, right? So I get the skepticism. But stablecoins are going to survive as long as we use them, and that's it.
Yep, we have another one over there.
Thank you guys for the great panel. I've got a question about something Thibault mentioned. Thibault mentioned something about a fully decentralized protocol not existing in a vacuum, and having written a paper with Vitalik on the subject. So I wanted to have two sort of things in my question. Number one is, can you just say the full name of the paper for the audience so we can all go through it? And second, could you sort of summarize what makes a decentralized protocol attached to regulations? Is it the on-off ramps that users end up using in conjunction with that protocol? Why wouldn't a fully compliant business eventually just go fully decentralized and go out of scope of something like MiCA and just become, just go into the black market, so to speak?
Yeah. Okay. So the name of the paper is Blockchain Code as Antitrust. The point we're making is that the code can actually, the code of a public permissionless blockchain in that specific case could actually be used to fulfill some of the objective we are trying to usually reach with the rule of law. The paper is open access. To your question, so this is not what I meant. It's a very interesting question. What I meant is that, you know, whether or not your project is, let's say, decentralized on the spectrum, right? So whether or not you indeed can take action for yourself without having to ask for prior authorization, which would be my definition of decentralization. If for the project to function on a technical basis and to be adopted, you need to rely on, let's say, Web2 tech giant services, then maybe your project is decentralized, but you know there is a choke point over here and the law can help. But to your question, you could make a point that indeed, the more decentralized, the harder, and I'm actually of this opinion, it is to regulate it. Now, what I get when I talk with top policymakers is that if they can't regulate those decentralized ecosystems and projects, what they would do is that they will regulate all of the players around it who are not decentralized. And they would say to those people, I was told by top officials, well, we'll put you in jail if you actually interact with a fully decentralized project. And this will be the end of it because you will actually put it this time around in the vacuum, and people won't be willing to interact with a fully decentralized project because it is not regulated. So maybe this won't be regulated, but end of the day, if you are not regulated but no one is using your project, well, what's the point? So I hope I answer your question, and this is what I get from, again, those policymakers. I'm not saying I agree, it's good, but this is, I think, what they will do.
You can see this in practice with privacy coins who are gradually going to be set in a vacuum away from all the exchanges. It's going to be difficult for them, I think. And it might not be they are decentralized, but not DAOs specifically. But you'll see them quarantined in a black market zone, I guess.
Do we have any more questions?
Somebody said no.
No, he was right. Thank you, guys. And I'm sure I speak on the behalf, at least those 50% that said they're not very informed on this topic. And thank you very much for being so insightful and interesting. And one big round of applause for all the panelists.
Bravo, guys.